episode 85 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at a rounded bottom trade setup. This is a setup that happens when the market hits a support level and is not able to break through. I will show you how to identify this trade setup under live market conditions, where to enter the trade, where to place a stop loss, and most importantly, where to exit the trade with a profit. So let's go on to the charts now.
We're looking at a rounded bottom trade setup here. This is pound US dollar 1 hour chart. A rounded bottom trade setup basically is a bottoming formation, and it's usually found after a downtrend. So price will be moving down, we hit a bottom, and then we have this a rounded bottom type of formation that gives us an indication that the price is likely to move up higher. So in this example here, we see that the price went and hit a high here and then dropped off of that quite fast actually with this inefficient move here, and then hit our support in the bottom. And then after that, price tried to go lower once more. And in this case, we get this rounded bottom type of formation here. You can almost draw a semicircle underneath this bottom here. And what happens in that case is that price shows that it's moving lower. It's essentially a compressed move. It moves lower, but it's not really getting anywhere fast. It just pushes lower, and then starts to round out, and then we see these small candles that will look like a rounded bottom. And then the candle starts getting bigger, and that's when the move actually starts after the momentum comes in. So in this case here, we do have this previous low from the day before, and then we get the same level. The price comes and tests the same level. It's unable to hold below that, and then starts to move off of that level slowly. This is the first candle that we see momentum in. So this is a strong bullish candle here. It engulfs the previous price action. So strong bullish engulfing candle, which gives us the indication that price is likely to move up higher now. So we wait for a 50% pullback here and enter the trade at this point. Our stop goes below the low here, making sure the trade has some room to breathe, and then we stay in the trade as long as the price moves up higher. So in this case, because it is an inefficient move, the price is likely to go and test this level, if not the high. And in this case, we do see that the entire inefficient move gets filled. So once the price comes to the previous high and it's not able to hold there, we get this long wick to the upside here, and the body of the candle is actually smaller than the wick. So that gives us an indication that the price is rejecting the high and could potentially move lower now. So at that point, we would close our trade out, or you can close the trade after this engulfing candle here. Now we have a bit of an evening star formation here. That's another indication that the price is likely to move lower. So we exit the trade and we get 95 pips in the trade from entry to exit here. So our profit in this case would be 95 pips or $950 with one standard lot. So just to recap here, we are looking for a rounded formation, and this type of rounded formation generally comes after a downtrend. Price would have been moving lower, and then we see price kind of sliding down but not really getting anywhere fast, and then it starts to turn around with small candles, and finally momentum comes into the market and price takes off. So we would enter the trade after this bullish engulfing candle here. We wait for a 50% pullback of this candle and enter the trade long. So we buy here, our stop goes below the lows here, and we stay in the trade till it fills this inefficiency or goes and hits the high here. In this case, our trade will close here after this candle is closed. We see a long wick to the upside, which normally suggests that price is likely to turn at this point. So we would exit the trade, or you can exit the trade after this bearish engulfing candle here. Either exit is fine. We get 95 pips in the trade from entry to exit. So our profit is $950 on one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course.
Thank you so much for joining me today. I hope you enjoyed this trade setup. If you like this episode, please like, comment, and subscribe below. It was a pleasure sharing this trade setup with you. I will see you next time with another great trade setup.